Hey, what's up? It's Lewis here with Crypto Elite, and welcome to another Market Update Trading Tuesday video. Today's date is March 15th, 2022. It is approximately 9 a.m. in the morning, and we are about to go over all of the cryptocurrency markets. A lot of stuff has been happening. We have been in a downtrend for months now. Are we still in the bear market? Well, yes, but are we going to come out of the bear market? Well, it looked like we were going to come out of the bear market not too long ago, just last week or maybe a week and a half ago. But that was short-lived when we got the fake breakout, and then we started to break back down again. So things aren't looking too good, but you never know, and it's always good to know where you are going to be buying and where the major supports are, because that is where you want to get in. So even though the markets have been going down, I have actually made some plays, some long plays that have made me some money because I got in at the major supports. So hopefully we could chart out some of those major supports today, and that way you will know when to get into a lot of good coins. With saying that though, of course, in a bear market, whenever you want to get into a trade, you should be looking towards shorts because you want to trade with the trend. At least that is what I do. I trade with the trend and I take less trades. So I trade less and I profit more, and I trade with the trend. And if we are in a downtrend, that is of course what I want to do. So let's get into it, start going over the big picture stuff and all the fundamental things, and then we could go into the actual charts. Okay, so first thing I look at is the Bitcoin Bull Run Index. It is at a 35, which is lower than what it was before, which is good because the confidence that we are at the peak, if it's, over 70, 80, what's the thing that I have over here? I have, if I scroll down, CBBI. Yeah, so over 95% or higher, exit all markets, 10% or lower, then I, buy everything and hold. So it's not quite at 10 yet, but it is lower because last week it was in the 40s. The week before that, it was in the 50s. So it's getting lower and lower and lower, more closer to that 10 percent or 10 number, basically, value. And that's what I want to see. So looking at it right here, you could see that the CBBI is on its way down. It's right here in the 30 range. So once it reaches down here in this level, that's basically an automatic buy for me. I would just look at like a couple other indicators, and then depending on what the situation is, then I would buy or I would sell, or I would buy or I wouldn't. But basically 99% of the time, if it's under 10, I'm going to be buying. The next thing that I look at is the Pi cycle top indicator. And obviously this is not going to really show me anything for quite a while. So you don't really have to look at this until there is going to be another potential top. But I just look at it because it takes like 2 seconds and it's part of my routine. And if I don't look at it, then I might end up forgetting to look at it in the future when I need to. So anyway, this is the Pi cycle top indicator, but nothing, obviously we're not at the top. And this only tells you if it's a top or not. It doesn't really tell you if there's bottoms, if it's a bottom. So nothing really to do with this. Next up, we have the MVRVZ score. This is actually a really good one. And it is getting down into this green area. So still just waiting. Once it hits the green, I'm going to be buying. Maybe I will look at the, not maybe, once it hits the green, what I'll do is I'll look at the charts and see what the price is and see what I think about it. But I will definitely buy at least some once it gets into the, once it touches the green initially. And then depending on some other factors is whether or not I will continue to buy or just go all in. I already have some numbers that I want Bitcoin to reach before I go all in. So if it all correlates together and everything, when you put it all together, ends up being like, this is in the green, Bitcoin's price is where I want it to be, the fear and greed index is really low, and all of these other things end up corroborating together and synchronizing, then I'm definitely going to be buying. But yeah, I'm just going to wait I got to wait until this gets into the green. So that is the MVRV Z-score. Next up, we got the R-HODL ratio right here. Once again, on its way, just like everything else, on its way down into the green. And once this hits the green, I'm going to be doing the same thing that I do with the other indicators, which is buy some, just buy some for my longer term account, and then corroborate it with the price and the other indicators. But yeah, this is at 1,287, and it looks like if it's under 350-ish, then that's usually the best time to buy. So I'm just waiting for this to get into the buy zone. Super easy. Now we got the the Bitcoin rainbow chart. It is currently in the still cheap category according to this chart. And obviously, if it comes down into the basically fire sale or into the buy territory, I will be buying. It looks like 26,000 is really the price that I want to go all in. And that looks like it's in the buy exclamation point category. So if it comes down here, I'm going to be all in. I probably won't even wait for it to get into the basically fire sale territory. Maybe that would be the better thing to do. I don't know, but Bitcoin under 26,000 or under 30,000 is a steal to me. So that's what I plan on doing. But yeah, it does, have some ways to go. So we're going to wait on this just like we're waiting on all the other ones. Then we got the fear and greed index. This is amazing. Right now it's at 23, so it's not low enough for me to just like go all in or for me to buy. And for the fear and greed index, I think it's under 15 is when I want to do an automatic buy. And so I pretty much just like wait until it does that. Otherwise, it doesn't really mean anything to me. If you go to their Twitter profile, you could see what it was like. Basically, right now, 12 hours ago, it was at 21. Then it was at 23. It was at 23, 23, 21. So it's basically been between 20 and 23, 21, 22, and 23 for the past few days. Yep, so I'm just waiting for it to get a little bit lower. Then the next thing that I look at is the funding rates for perpetual swaps. And obviously, they're all negative, so this is not really any surprise here. And this doesn't really tell you like that much unless we're in a very particular situation. Because of course they're going to be negative right now. Everything's in the red, and we're in this big bear market. So I don't know what this was. Sorry, but yep, that's this. Then once I look at all of these fundamental indicators, what I do is I go into Glassnode and I look at all of the on-chain data and on-chain metrics that they're looking at. So I'll let you know what I see in here. So one thing in here is that back in 2013, there was a lot of accumulation all the way up until the very, very, very top. And then this is where Mt. Gox was hacked and a lot of the Bitcoin was stolen. And this was really the top of this cycle all the way that started from basically 2011, right? And so then you could see that it dropped and dropped and dropped and dropped. And a lot of the people that were in the market over here ended up buying back right over here. So that's pretty interesting because they bought the dip, but it wasn't really the actual dip. And then it ended up, obviously dipping much further down, and then people bought the dip again. And then that wasn't even the actual dip. The real dip happened after that. And then more people started buying the dip down here. But it really, you could see 2014. I mean, this was really 2013, right? Late 2013, let's just say the beginning of 2014. So all of 2014, it was sideways and down. And then all of 2015, it was also sideways. And it was basically in this consolidation period for 2 years, pretty much. So is that what we're having right now? Well, it's only been 5 months, I want to say, maybe January, February, March, December, November. Yeah, about 4 months since the top, 4 to 5 months since the top. So are we going to see an entire year or longer? I have no idea, but this is definitely something that could happen because, I mean, this happened back in 2013, and then remember, well, maybe you don't remember, but in 2018 and 2019, it was another 2 years, 2 full years, 2.5 years of sideways bearish market after that top. So now we had another top in November, but are we going to have another year to 2 years of sideways downward movement, or have things actually changed? Is it actually different this time? That's the question. And then looking at what we're looking at right now, or what's happening right now, is basically we're in this really interesting spot, because I think a lot of people started, well, not I think, like this is showing that there was a lot of accumulation really near the highs in September, October, November, December of 2021. So I think what happened is back here, a lot of this is probably where a lot of the big people ended up distributing, and then, it fell down, and then it must have caused either an insane amount of retail traders to come in on that second wave up, back in September when it went past the 60, what was it? I think it reached 66,000 back here, and then, or maybe 60,000, and then it came up and it reached 69,000, 70,000 right here. So maybe right when it breached this all-time high, this is when a lot of new retail traders came in, or retail speculators, and maybe even whales and bigger people came in back here again. But you could see that back here, in 2018, after we had the blow off top and stuff, no one was there was no accumulation back here for quite a while. But here, right now, there still is some accumulation. It's not just totally as dry as it was back here with no liquidity or anything like that. So honestly, I think that because there was so much buying up here, and then there's still buying, this sort of makes me think that there's still too much hope in the market, and we will get another flush out, so that a lot of these people just capitulate and, screw this is a scam. I don't think anyone at this point is going to say, screw this is a scam, but there's probably going to be a lot of people who are very emotional and sell if we get a flush out. And I don't know, I just think that there's too many people that are still really, really hopeful for this market. And so I am sort of expecting more of a downward movement. And so I'm not really looking to buy anything. But of course, as a trader, if I play level to level, so if something changes in my analysis, I will immediately switch it up. And that's what I did last 2 weeks ago. I switched up my view because I was bear since November. I was since literally the top, I was this sucks. Ethereum, it looks terrible, and that's what I used to gauge, all of the cryptocurrencies. That's why I sold. And then last week or a week and a half ago, we finally made a higher low and then a higher high. Sorry. Well, yeah, no, we did. We almost made a higher high. So we made a higher low, and then we breached a resistance. And so I was okay, so maybe the bull market, well, not the bull market, but maybe it's going to go up even more. And I changed my stance. Of course, that ended up being a fake breakout. So it was just totally not even, it didn't end up being real, and the market ended up crashing again. So now I'm back to being bearish, and I'm not going to be playing the breakout plays, and I'll show you that when we go into the actual charts. But yeah, as a trader, I don't have a stance where I'm I am only bullish or I am only bearish. I am on the macro, I'm talking 4 years plus scale. I am bullish. I'm macro bullish, 100%. Obviously, I wouldn't be in crypto if I wasn't macro bullish, right? Everyone should be bullish, because in the long term, because this technology is revolutionary, and between NFTs going to be in every single game and every single industry, and smart contracts, same thing, going to be in every single industry. The technology is just there. Pandora's box has been opened, Bitcoin and cryptocurrency. So the future, it's inevitable. It's literally, it is what it is, you know? So it's only going to be going up and to the right for eternity until, or at least until a newer, better, you know, money comes along. But who knows when that's going to be, probably 100, 200 years. So that way I am macro bullish, because it makes no sense to be macro bearish in a market that you're in. Otherwise it'll just go to zero and then you'll have to move on to another market, and that's stupid. So, I am macro bullish, but I also, you know, play level to level. So on the shorter time frames, maybe I'm bearish, maybe I'm bullish. It all depends on what's happening, you know, every single week, really, every single day, really. And so that was a long tangent. Let's get into the actual charts now. So the first thing that I look at is the total market cap for all of cryptocurrency, because this really gives a big general picture of where we are. And this is the yearly chart. So each of these bars represents 1 year. And you could see that we had 2018 was a down year, 2009, and then 2019, 2020, 2021 have been up, up, up. So what I like to do first is take the Fibonacci, and you could take it from the bottom of here, or you could take it from the bottom of here, or you could take it from the bottom here. It all ends up basically being the same thing, which is that the 61.8 of the move up is $1.216 trillion. And this is where I want to really just get back into the market very, very hardcore, because unless this is a really, really bad bear market and we go all the way back down to the 78.6, which is around $730 billion, then we should get a big bounce off of 1.216. And even if this is a bear market, I think we still will probably most likely get a bounce off of 1.216 or around this area, wherever the 61.8 Fibonacci lies. So that's why I have it here. The only other option that might occur, the only other thing that might occur is if you bring this down and then the 61.8 is at $901 billion. And that's possible. That is possible, because you could see we are on the 23.6 right here. But that's something that I don't think is really the case. I think that this is more of the case. So that's something that once the price starts to come down and maybe we get a bounce off of certain areas, I'll have more information to decide whether or not this is the correct Fibonacci or the correct Fibonacci is something else. But right now, this is the correct Fibonacci. So that was the yearly. And then this is the monthly. So if we go down to the monthly chart, each of these bars represents 1 month. And you could see from the bottom of March 2020, that was the pandemic, basically crisis of whatever. And then it had this huge rally since then. 1, 2, 3. Excuse me. 1, 2, 3. So now we are really, it came down to 38. This is why I think this is the Fibonacci. This is the correct Fibonacci. It's because it came down to 38.2, bounced up, came down to 50%, bounced up, 50%, bounced up, and now it's back to the 50%, and then it's up a little bit, but it's still, I'm waiting for here. I'm waiting for 1.21. And this is also where it was in May, June, and July of last year. So it's like, why are people, I don't get how people are so super bullish and everything right now and thinking we're going to keep on going up when the 61.8 is right here. It's down here. It just this is where the price usually always comes down to the 61.8. So it just, I don't know, doesn't really make sense why we would get a bounce here, to me at least. So then we could go down into the weekly, and on the weekly time frame, we have been getting a nice bullish type of pattern on, well, not pattern, but the MACD is pretty bullish, but we're probably going to end up getting a M, or excuse me, a W shape, to look like this, and then move up. And this is where right around here is probably going to be 30,000 or maybe even 26,000, something like that. So let me go back, because you could see that this is an M shape right there, right? And then this could be a W shape. That tends to be what happens. So can I Why is this not? All right. Hold on a second. There you go. Okay. So going back to the weekly, you can see on the weekly time frame too, you can see this resistance, this big resistance. And that right there, this right here is where I got tricked into thinking that we had the breakout, because on the daily, we did have the breakout like right there. But I will never, ever, ever play a breakout play in a bear market again. That's what I did in 2018, and it totally wrecked me. So I did it one time right here, just because we had the very first higher low. Like this was the low, and then we had a higher low, and then I was like, okay, so we got our very first higher low. Maybe we're gonna get our higher high, or maybe we're going to at least bring it all the way up here. So I thought we were just going to come up right here, and then I was going to sell everything again. We didn't even get there. This was like a very, very key breakout, and it tricked a lot of people. So now I am just going to wait. And as you could see, this looks like it's forming some like a descending triangle, because it is. And usually, for the most part, descending triangles break down. So that's what I think is going to happen. Or, this is crypto, so it's probably going to do something like this, and then here's the breakout, and it's going to come down, and then probably like bounce again, and then bounce back down, and then probably like do this, and then finally fall. So that's what I'm thinking is probably going to happen. I'm not super bullish. This has been a floor. This has been a major floor for a while now, and I do predict that this floor will break, and then we get down to the 61.8, because the 50%, bouncing off the 50% fib is just not something that I see unless we're in this like quasi bull market. But even in bull markets, sometimes we hit the 61.8. So I would rather just wait until 1.22 to really go risk on and try to put on any long plays. Until we reach here, I will be primarily shorting or looking for shorts. Next up, we have the total market cap for all of the altcoins. So this is everything except for Bitcoin. You could see that there's been this crazy resistance. We just have not toppled it. Last week, I said that we were going to, come down here. So I'm waiting for this to break, pop back up, and then this is going to be such a good shorting opportunity. So I'm definitely waiting for this. Okay, so then after I look at the total market cap, so what I like to do is go into the dominance levels. So I'll start off on the altcoin dominance, because this gives a much better picture of the overall market. Once the altcoin dominance level reaches its all-time high, it reaches the highs and then starts to fall back down. That basically tells you what's happening within the market. So it reached its all-time high in January of 2018. That was when the first bull market ended. And then we had basically 3 years where it just went down. So January of 2018 to January of 2019 is 1 year, to January of 2020 is another year, and then to January of 2021 is the third year. And then we started our bull run, right? So we had all of 2021 just super, super, super bullish. And then, wait a minute, we didn't have all of 2021. We only had January, February, March, April, and May, which was super, super, super bullish for alts. So we had basically started in December of 2020. Yeah, November, December 2020. And then we just started this crazy, crazy, bull market up until around May. So to be honest, the bull market didn't really last that long. Like, yes, if you count it from here, from 2019, yeah, it did. But if you count it from basically November, December 2020, where it really started, then actually, I take all of that back. This was definitely a good run up, and I remember it was January, February, March. It was March 2020. That was when the stimulus hit, right? So March 2020 is when the stimulus hit, and that's when the bull run really started, was like right around here. But dominance levels tells you where it was flowing. So it flew into alts originally, but then it flew much more into Bitcoin. Yeah, Yeah, Bitcoin had that huge run up in November and December, and then the altcoins really started to take off in January. So it was really January through May where the altcoins really took hold. And then of course May we had the top, and then the market crashed for altcoins since May. However, Bitcoin did crash, but then it came back and Bitcoin rallied back and it made new all-time highs, right? After July and August, it came back and it made new all-time highs. Altcoins didn't really make new all-time highs, but the dominance level did shoot up, which means that there's a very big spread of money across all of the different altcoins. And personally, this does look somewhat bullish because obviously we're making a low here, a higher low, and now if this is the low, then this is a higher low. I don't think that this is going to be the low, but we made a couple higher lows on the monthly chart. So what if we bring it down into the weekly chart? What does that look like? Well, it does look like it has this clear roof and we keep on hitting it, and then we go down, hit it again, come down, but not as far, hit it again, and then come down, and maybe we won't even get down as far as this, right? However, this could be one of two things. I've seen this play out in two ways. The first way is that it just consolidates like this, right? And then eventually makes it like this, and then boom, and it shoots up. But a lot of the times I see it consolidate like this and then shoot down. So just given the macro structure, given what's happened in the market over the past couple of years, given the world events right now, given everything that's going on, I would bet the more likely scenario is that it will come down and eventually hit this area, and that alts will continue to bleed and continue to just bleed out. And so I can't put too much faith into alts, because a lot of alts have gone down drastically since May, since here. And even though this went up, a lot of alts, even by the time January came around, even though December was a good month for the altcoin dominance, and January was a good month for the altcoin dominance, by the time this came around, alts were still going down in value, in price, right? So I don't like that. I would much rather have the dominance level be going down with the price that was going down since really November, right around here. It would be way better if the price of the asset went down and the dominance level went down. Then I would have confirmation on both. It would look the same on both. But with this being this way, this makes me think that alts could crash even further down than what they did. And I don't like that. Plus, you could see that the ribbons are getting much closer for the exponential moving averages. And if you click on the daily time frame, they've already crossed. We've already crossed below the daily 200. And that is a huge resistance. Now, this is a very, very big resistance. So I'm waiting to really go long. Like I said, when I talked about the total market cap, I'm waiting for the total market cap to come down here. I'm waiting for the dominance levels for altcoins to come down to the 40%, maybe the 48%. And I'm just waiting for it to come down because, you say, oh, it can't come down. No way it could come down that far. Well, I mean, look at what it did up here when it reached 65%, and then it dropped all the way down to 27%. It did fall down that far, so you can't rule anything out. You can't say, oh, no, it's up this high, so it's not going to fall. Same thing when prices, a lot of the alts are down right now. So you can't say, oh, it fell this far. It's already down 60%. It's not going to fall anymore, or it's already down 70%. No, it could fall another 90% from the current prices. You got to understand that. So if you're a trader, then your goal is to mitigate your risk. And if you're trying to mitigate your risk, then you're not going to go long when things just seem like they could still go down significantly and things just seem way overextended and the macro environment is not bullish and is very uneasy, So if we shoot up, everyone's going to miss it, and all the good traders are going to miss it. So I'm not trying to jump into everything. I did that in 2018, and I learned my lesson. So now I'm looking for shorts, and I'm not going to jump in until something drastic happens or like the momentum shifts, and because I trade with the trend. So we have that. And then we have the Bitcoin dominance, which is simply the inverse. And what you could see here is that the Bitcoin dominance itself, it made 1, 2, 3, a triple bottom. That's usually like the indication of a bottom. And now it's on its way up. It's definitely hitting at least 44, right? And it's above the 200-day moving average. Look at this right here. It hit it and it fell back down. So now it's above it. So now this is all support. It has lots of support. So it just keeps on making more and more support. And so there's a higher likelihood of it continuing up, which means that Bitcoin it means this. It means that if the prices for Bitcoin and altcoins are falling, but the Bitcoin dominance is moving higher, then that means that altcoin profits or simply alts are moving their money from altcoins into Bitcoin because Bitcoin is gaining market share. So it's gaining dominance. So Bitcoin's dominance is rising. However, Bitcoin may still be falling in price. It's just falling less than altcoins. And that's usually the way things go. When Bitcoin moves 5%, altcoins move 10%. And I bet if you look at ETH BTC, you could probably see that it's going down. Yeah, ETH BTC just closed below this huge support level, right? And I think that it's going to fall back down now because we hit it as support. I mean, you never know. Maybe it's going to shoot up and altcoins are going to have a little bit of an alt season. I don't know. But I am just exerting a lot of caution until we reach like the levels that I feel super, super comfortable longing in, like majorly longing. So right here. So my game plan is basically if I'm going to long right now, anytime before it hits here, before ETH BTC hits here, or the total market cap hits here, or the dominance level hits here, if I'm going to long, I know that I'm taking on a lot more risk. So since I know that I'm taking on more risk, longing, because it's not in my favor, the risk per trade is going to be 1% or less every single time. However, once it reaches here, then my long positions, I could bring it up to 2% risk, maybe even 3% per trade. However, while we're in this downtrend, I will risk 3% on shorts per trade, and then I'll risk 3% per shorts, 3% per shorts. And as we approach here, then I start lowering the risk per trade for shorts from 3% down to 2%. And then once we get into like this big zone, basically like right around here, once we get there, then I will lower my shorts, the risk per trade for my shorts down to 1%. And if you don't know what I'm talking about, I do have a course. It's at cryptoelite.com, and it goes over the risk per trade and exactly how to put your trades together so that you never overtrade and you never put too much into any one singular trade. But if you understand this, then you will understand the logic and the reasoning behind starting off with your short positions, risking 3% when it's here and then here and then here, and then lowering it to 2% once it gets here and here, and then lowering it to 1% down here, right? That makes a lot of sense because once it reaches the territory where it's most likely to bounce, you don't want to risk a lot in shorts. You want to start risking more in longs. So we have that. We have the total market caps. We have the dominance levels. And then we have Ethereum market cap, the market cap of Ethereum. Market cap of Ethereum has just been going down, right? And so maybe Ethereum has a bounce up to here, but regardless, I'm still looking for shorts. So if Ethereum's market cap comes up here, I'll be looking for shorts because I think that a lot of people will be selling. And where do I want to actually buy? Well, maybe if we go to the weekly and we take the fib from here to from here to here, the 61.8 falls right there. That's probably why we got that big bounce. So we're probably going to get another big bounce when we fall down there because there's only one bounce right here. However, ultimately, it's probably best to have it right here, which once again is the 61.8, And it's exactly where we were back in May, June, and July of last year. So what's the big deal? Like, it's most likely going to come down there, which means that prices are probably going to fall drastically. Okay, so we have that. And now we can, oh, the other thing is the BLX, right? So one thing that I did notice on the BLX, because I was saying that I was definitely going to buy Bitcoin at 30,500 because you could see like that's the horizontal line, like right, right here. It's basically 31,000 to 30,000. That's like, or 29.5K. That's this horizontal line right here, right? And so I was thinking, okay, I'm definitely going to buy it at 30.5, but I might actually buy it a little bit higher because looking at the BLX, the Brave New Coin Index, if you connect the 2017 top to here and here to all of these wicks, basically, you could see that it actually is a little bit higher. It's around $32,000. 32 to 33, maybe 32 to $34,000 even, that there may be a bounce, that there may be like some actual bounce. And that's if we connect this top right here to this bottom. Maybe, hold on, put this like this, bring this down here, bring this over here, boom. And then we go like that, and then we simply disconnect it and bring it higher up. Yeah, that connects this to here, to basically here, to here, and to here. So that's a lot of touch points, right? And so that, that's 33,000. So maybe we'll get a bounce off 33 instead of 30 instead of coming all the way back down to the horizontal, anywhere between 29 and 30.5 or 31. So that's definitely an option for BLX. Okay, so now I think we can go into the actual chart themselves, like Bitcoin. So let's start off with Bitcoin, and then we're going to just go through as many charts as possible. So first thing that you notice right off the bat is that we had the lows down here at around 30K, and then obviously the highs all the way between 60 and 69K. And that right now we are consolidating, and we have had 4 weeks of support at around 37,500. And this is something very big. So this is the weekly chart. And if we look back here, we can see there's a giant wick, and then everyone bought it up. And then giant wick, everyone bought it up. A giant wick, everyone bought it up. A wick, everyone bought it up. Same thing back here. Wicks, 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 and everyone kept on buying them up. Okay? Look to the upside over here. First, we had a giant wick down, and then we had a giant wick up, and everyone sold it. And then we had a little bit wick up, everyone sold it. And then we had no wick, and then we had a very small wick, and people sold it. And then no wick, no wick, no wick, no wick, no wick to the upside. Look at it over here. We fell down, very little few people bought it back up. We fell down, it got bought back up. We fell down, but very, very few people bought it back up. Then we had a wick to the upside, and everyone sold it. Then we had another wick to the upside, everyone sold it. And then we had a wick to the downside, people bought it back up. And then we had a huge wick to the upside, and everyone sold it. Then we had another huge wick to the upside, and everyone sold it. So it's like people just are not willing to... Everyone who bought it here or bought it here or bought it here, they want to sell it here and here. Just like everyone who sold it up here wanted to buy it back down here. Now everyone wants to sell it up here. So the selling pressure is absolutely insane. Everywhere between $42,000 and $45,000. This is there's just massive amounts of selling pressure. So until we close above 42, 43, basically $43,000, we have to close there on a weekly time frame, then that might be bullish, right? But really, even just like closing above 45K would be more bullish, obviously. And so I'm not really looking to go long and to go super long, because we're in between this local bottom, this top right here, this local top, and we're literally right in the middle. So there's 6% up, there's 6% down. So we're directly in the middle. So this is a no buy zone for me. If it comes down here, that's a definite buy zone for me. If it comes up here or here, those are definitely sell zones for me. So that's what I noticed on the weekly. Nothing to do right now. Maybe on the 3-day, we could go down lower and it's just chop, 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 chop. And I'm not trying to get chopped up. I'm not trying to like put in every single move, you know, like try to catch every single little move. So I will say like there's this right here. So we have, what is this? Boom, boom, put this here, bring this like this. So this is the daily on the 12-hour. So you can see on the 12-hour, you know what? To be honest, even on the 12-hour, it's not really a symmetrical triangle. I wouldn't even use this. I wouldn't even use that. I would say we hit it here, okay? Then we had this bottom right there. Then we had this bottom right here. And then we had this top right here. So the fact that we closed above this top right here, that's pretty bullish to me. So that's bullish for another 7%, 6% move up, sure. But like, you know what? It's overall we're in a bearish trend. So yeah, I'll long it here with like a stop right here, like a stop. No, literally like very, very close. What I just did right now was I noticed that we closed above this previous high. So then I longed it and I just put a stop. I just put a stop underneath here. So like literally like 3%, not very much. And I only risked a very, very minimal amount, under 1% on this trade, because like I said, we're in a downward trending market. So I'm not going to be risking, 3% or 2% on long position trades. I only want to be risking 1%. So I did put on a trade, but realistically, it's like I'm just going to wait, and I would much rather wait until it hits down here at 30.5 or at the very least 34.5, because this area is a really big area, or it has at least shown to be a really big area, $35,000. So it's literally right in the middle, and I really don't want to trade. And if we click that, this right here, what happened right here was definitely actually you really actually couldn't say that was a deviation, because it was down, down, down. It broke support. I guess if you say that this was support and then it broke it and then it pumped back up, that was pretty much an ideal position to long right here. But obviously it didn't even come back down here. So this would just be a really difficult thing to trade, it looks like. I mean, this trade down here would have been fine, getting in like right here, and more like right around here, getting in at the bottom and then selling right here at the top. That was pretty easy trade, because your invalidation level was right here, right? But other than this one trade setup, and obviously the sell, the sells right here and right here and right here, it's been pretty difficult. And so, yeah, I'm not going to try to catch every single move and just get chopped out. That's the biggest thing that you should probably take away from this. Don't try to over trade in conditions that aren't favorable. Me, I am like so good at shorting when we're in this downtrend, right? Like how I shorted Link, and I shorted Matic, and I shorted Cardano. I shorted so many things. Like I was so good at that. And now it's like, damn, we're sort of consolidating, and we made a higher low. So it's really difficult to understand, like to know what direction we're gonna move in. And you know what? I'm perfectly fine being on the sideline until we do establish a trend again, and then I could go in, I could make a lot of money, and then I could take it out and be totally fine. And so I did put this right here as a possible trade setup. So we had the close like right here. This one closed right above these ones. So it's possible that we will have like another move up to pretty much the all-time high, not the all-time highs, but basically this 42,000 level, right? And then fall all the way back down and continue that path, that downward trajectory. Although looking at the 4 hour, here it is. Looking at this, we might not even get there. You know, we might just get here because now we have this resistance, we have this resistance. So this trade is actually, I don't even feel comfortable putting this trade on. I would rather just wait. So yeah, I'll just get out at break even. And this right here is the 4 hour, like, yeah, like I mentioned before, I actually don't like this. But one thing that you could use this for, this diagonal trend line, is somewhat of a confirmation in terms of like this right here would be a really, really good place to short. So this is like an example of a trade that's like pretty solid, to be honest, this short position trade. So basically what this is there's support here, is some support here, I guess, support here, and then a little bit higher support right there. So basically like right around this whole area, right? This entire area, there's like lots of support around this area, right? So if it breaks below, if it comes down here and then breaks below, you know that it broke below the support, so that's not good. And then also there's this diagonal support, obviously support right here, and then support right there, and then diagonal support right there. So if it breaks below the horizontal and the diagonal, then on the way up, it's going to have a hard time breaking past through that again. So that's when you could put on a short position, say, okay, well, if it does break above it again, then you want to get out of your short because it's a deviation, it's a swing failure pattern, basically, where it falls below the supports and then it pumps right back up. And if it does that, then okay, get out of your trade. But like otherwise, put a short position on right here at the horizontal and diagonal resistance, and like it's a really solid trade. So that's pretty good. And so just looking at it from a bigger time frame, just making things super easy, is we have the support right around here, right around 36,400. We have the resistance right around 45,000. And then we have the second resistance, the other resistance right around 41,700. So we have all of that. And then this is where I long, this is where I take profits, this is where I short. I probably short here as well. And then we have the, you know, obviously if it breaks down and it breaks through the support, then I want to short there on a retest. And that's Bitcoin. So pretty simple stuff. Then we have Ethereum. Let's look at Ethereum. So Ethereum on the daily, just down, lower highs, finally made a higher low right here. But then let me get rid of this. But then we had a lower low, and now we have a even low, I guess, you know. So Ethereum doesn't look good at all. And what can you do? So what should you do? You should do this. Boom. There you go. You know exactly that if it comes up to 28.50, then you want to sell and get out, because resistance. It just keeps on hitting this and then crashing down. Plus, like this right here is exactly what I was talking about in my last with Bitcoin. How if it falls below something and then comes back up, you know that it's a great short because there's horizontal and diagonal resistance. Look literally like right here. Sorry, not there. Literally right here. This is like, you might ask yourself, well, how do I know to short here? How do I know that I want to put on a short that looks like this? How do I know that? 4-to-1, 4.16 RR, incredibly good short. It's because this fell down and it broke below it. And then this came back up, made these highs, and then fell back down. So what do? You put this horizontal line right here as the support / resistance. Then you take the diagonal and you put it here and you put it here and you extend it. Now, right here at this very, very key point, you have the horizontal and you have the diagonal reaching. So that's where you would want to sell, because there's two confluences now, right? Right here, you only had one confluence. You only had this horizontal line. That's it, right? But now you have the horizontal and the diagonal. So you have two things. So that's what makes it better. So let's say that the price does this, right? Consolidates a little bit. Well, where would be a really good place to short? Well, if you take the horizontal like this, now you have right here 2796, right underneath 2800, right? This is a great place to short because the price is probably going to hit here, rejection, 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 and then get rejected again, and then fall back down. So that's like a really good, easy way to trade. It's not that difficult. Okay, so that was Ethereum, and pretty much right now it is, or that was Ethereum the next day. And so it's just a heads up. This is the next day because I did not update this video yesterday. So now I'm looking at the charts again, and we did have this nice little pump up, which is cool, but it still has not reached the level where, I would want to short, like right around here, maybe like 2800, something like that. So I'm still not in a short position. And it's like after today, after this big pump up, it definitely tricks your mind as a trader thinking like, oh man, my short positions, are they still good? Like, you look at this and you'll say, oh, this is starting to turn around and starting to turn up. But like, look at this. This was turning around and started to turn up, and it still crashed down. So you have to really just use technical analysis, and you can't really just you really can't have your emotions be all over the place when you're trading. You have to just put the trades on and know that if you consistently put the trades on over a period of time, if you have a good enough strategy and a good enough edge, then you're going to win. And if you can't trade during certain market conditions, then simply just don't trade. Like, it's not that hard. Just don't trade. Like right here, this is Bitcoin, right? Look at Bitcoin since January 21st. From January 21st to literally March 16th so far, we've been in basically a 26% range. If that, like, the most of the moves have been 20%, right? Most of the moves have been from here to here, like range low to range high, right? And this has been 3 months now, January, February, or all of January and all of February, and into March. So an entire 2 months. So different than this, incredibly different than this, incredibly different than this. So it's like, if this 2 month range bound consolidation chop is not your forte, you don't have to trade it. There's other things to do than simply trade it. That's why I always say, like, it's really good to have another job outside of crypto, unless you are a full-time trader and you like trading the 1 hour charts or the 30-minute charts or something like that, like you're a scalper, you're a day trader. But I do tend to see that most people make money like trading the higher time frames. You trade less and you make more money doing that way. And also, when you become an investor, like the big money investors, they're not like traders, like trading every single day, right? So it's like, what do you want? Would you rather be a trader or investor? And I think, like, ultimately you want to be an investor. And it's like, look at this. What's going on right here? This right here, the top was 40,872. And this just closed at 40,970. So this just closed above the previous high. Let's see what happens. Is this going to come back down, and like on the 1 hour chart, right? And come back down just how this did? Like, what is this? What is this? All the way up, all the way down, all the way up, all the way down, all the way up. This is literally just chopping everyone out. So honestly, it's better to stay out of the markets in these type of situations. Like, don't get caught up. Look at these giant wick up, giant wick down, like, and now giant wick up. And then, so I'm just saying, use caution. And then maybe whenever something happens, then you can make a move, or just predefine where you're going to like go in and where you're going to go out based off of like risk. Like this ETH trade right here, this is a pretty solid risk to reward with your risk defined at a level that makes sense. You know what I'm saying? Like we had the highs, like high, 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 and it's like been resistance, multiple times. So if the price jumps up above here and closes, then yeah, your trade idea is invalidated because this is no longer a big enough resistance to cause the price to fall back down. So with that said, like that's something that you could do, and that's something that you could wait on. But like just seeing this right here and say, oh, I'm gonna go long like right now, or I'm gonna go short like right now. Like I guess you could go short right now and then have your stop up here, and then your take profit down either here or here. But it's like, just remember that if you follow technical analysis and you play these like really basically obvious plays, to be honest, like major supports, major resistances, stuff like that, you're most likely going to do pretty well over the long run. And if you're not super greedy, and if you take your profits, then you could a lot of the times outpace the markets, as long as you know that if we've been in a very, very bearish market for a very long time, right? And then we start to turn around and you could sense that we're starting to turn around, then what you would want to do is you would want to basically buy and hold and then let that play out. But like right now we're in this weird consolidation period. I don't know if we are going to have another bull run up to, let's see, Bitcoin, up to, this major weekly resistance up here. Let's get the weekly on here, right? Like maybe up here or maybe up here to like 50K. And then everyone's going to say, oh, the bull run's back on, everything like that. And then we're going to have the real flush out or not. I don't know what this is. Back here it was pretty obvious to me, to be honest. Like that's why I bought back here. And if it reaches down here, it would be fairly obvious as well that we will get a bounce from anywhere between 29 and 31 or 32. Like I do believe that we will get a very significant bounce from these levels. But like right here, like in between this major support and like, I guess this is the major resistance over at 50K. And even this, 45,000 major resistance, or 43,000. Like we're in the middle, we're in the middle, and things have been just going up and down and up and down and up down. And then also, I'm not sure if I mentioned this, but all these wicks are like from the top side. Oh yeah, I did mention it, how all the wicks are from the top side, and back here all the wicks were from the downside. So I'm still not super comfortable like going crazy long. I still want to be sort of in stables, and I would feel okay missing out on like a crazy move. I wouldn't feel bad if we just pumped up and I was like mostly in stables. I would be fine with that. Like back here I wouldn't be, right? And especially back here, like during the bull market, I definitely would not be okay just like being in stables during the bull market. But here it's like there's so much stuff going on that I'm just trying to protect my capital, like that's what I'm trying to do. And if something changes, maybe we flip this 42,000 area, right? We flip 42K. Let's go on the daily. Actually, no, it's not even 42K because I did that before. Like we really have to flip 44.5. Like we have to come above here. Sorry, 45,000. We have to come above 45,000 and then retest it as a support again. But then by the time that happens, 50K has already been 50K is only 12% away. But it's just we have so many resistances, and like during the summer, like we really didn't. And I would love to see this. I would love to see this right here. Like a fail below this this is like the obvious, support. And we had a fail below it, and then we jumped up and we closed above it. That right there, boom, instant buy. So like we don't really have that same support level. I guess right here would be the support level for that. So if we fall down here, and then we have an instant close back above it, that would be a long opportunity. But like this right here, like this is not good and big enough support for me to do something like that with. And this is still, this line right here from all the way back in summer is the real support. So if we do something like this again, that would be great. Like we come all the way back down here, close below, and then immediately shoot back up and close above. Boom, long here for the moon. Well, not the moon, but at least like 50K or something like that. Or not 50K, but at least 45K. And then who knows? You have to play it level by level after that, you know? But like right now, right exactly where we are right now, it's such a difficult thing. And even I was thinking about this. I just did this. So I just bought it. I just bought Bitcoin based off this close, this 4-hour close. And it's like, it looks like it's going up right now, which is great. But this is a diagonal line, and yeah, it's had a lot of resistances here, and then it closed above the resistance, which is like, okay, cool. Now I bought back, and now I'm going to try to sell it up here. But even this diagonal line isn't really it's not even as powerful as the horizontal. So this right here this is like such a powerful horizontal resistance right there. Right there's support. Right there's resistance. Right there's resistance. So this area right here is like really, really, really big resistance. This is where I would rather like one right here and then one right here. One sell right here and then sell right here. Like either of these two places are great sells. This right here, I sold it and then I bought it back right here. Diagonals in this conditions, probably shouldn't even have done that. But I guess the point that I'm trying to make is look for the really obvious levels, because most people seriously are going to have a really hard time trading, and they're going to get chopped up, especially in these conditions. Maybe if it was 2017, or maybe if it was 2020 or 2021 in the very beginning when there was the bull run, yes, of course. Or if it was, November and December, and the first half of January where everything was going down, it was trending, it was super easy, then yeah. But these conditions, just wait until 45K or wait until 35K, wait until the major supports and resistances that's what I would do. Especially that way you'll have more time to do other things and just work and make money, in the meantime. Otherwise, this will happen to you. Like you'll buy the breakout here and then it'll come down and then you'll be like, oh shoot, and then you'll sell it and then it'll shoot back up and then it'll start to fall back down and you'll sell it because you bought, the breakout here, and then it'll fall down and you'll sell it and then it'll shoot back up and you'll just be like, damn, I am glad that I bought it back right here though, because it's only 1% so far, but we'll see what happens. And so with saying all of that and just knowing, the total market cap, the total to the Bitcoin, the dominance levels, like I still think the dominance levels could drop for altcoins and stuff like that. I'm still bias short, I still want to be more bias short until something changes. So I will be selling, I'm definitely going to be selling like around 42,100 and 45,000. Like those are obvious sells. Like I'm going to sell it because there's a higher probability of Bitcoin falling from these levels now that we're in a downtrend, right? But if it doesn't, and if it keeps on going up, you could buy back on the retest. And so with all of that in mind, what I'm going to do is I'm going to go through the different charts that are available on FTX Perpetual future charts. And I'm just going to plot out like some key levels and make some alerts, because I think that that's really like the best thing that you could do is like just plot out the key levels that are really, really big resistances, big supports, and then set alerts. And then you could go in or out of trades that you have higher confidence on. Because I'd much rather go into trades that I have a lot of confidence in, that have a much higher probability of hitting, even if the risk to reward ratio isn't even as good. I'd still rather go in like let's say that. But the other thing is that if you have a high probability trade setup, usually the risk to reward is good. Like this right here, this is a great high probability trade setup. And the risk to reward could be, something like this, 2.31. That's really solid. You could bring it down. You could probably bring it down more here, more to like 2.69, right? Like, it's a high probability trade setup because this is a major support and resistance, and you're getting in as close to your invalidation level as possible. So if it jumps up here, then the trade is invalidated because this is the resistance that you think it's gonna fall from. So if it jumps up here, then the trade's invalidated. So that's the key thing. Try to get into your trades as close to the invalidation point as you can, so that your risk to reward is the best, and also have the highest probability trades that you could possibly have by looking at the higher time frames and then going into the lower time frames. And then the other thing is know where we are in the market cycle and where everything relates to each other. So like, obviously when we were falling down, this was all like definitely want to short. And now it's like, it's a little iffy because we made a higher low and it's more on the short side. But like over here it was like 90% short, 90% short, 80% short, 70% short, 60% short. And so I'm still leaning towards, shorting, but like once it comes down here, I'm definitely going to be leaning towards longing. So you have to know where we are in the market cycle and how that will affect whether you're going to long or short, and how much risk you're going to be putting into your longs versus how much risk you're going to be putting into your shorts. And so that's basically a key concept to understand. And so now that we understand all of that, right? Now that we understand all of that, what I'm going to do is I'm going to pull up the charts with the indicators, and pretty much I'm just going to go through a lot of them, a lot of the ones that I want to go through, and plot out the levels and then make alerts. And then I will pause the video and then do the charts, and then I'll unpause it. And I will do the charts using the trading cheat sheet checklist that I have right here, which is in the crypto mastery course at cryptoelite.com. So it's basically, I'll read it out to you, verify every trade is good with good TA, have a trading blueprint where you do top-down analysis. You start out on the monthly or the yearly, even on Bitcoin and Ethereum, or the monthly or the weekly on these other coins, and then go down into the daily, and then eventually possibly the 4-hour if you want to do that. If it's at the support, then don't sell. If it's at the resistance, don't buy. You want to draw the trend lines and counter trend lines. You want to use the Fibonacci tool. And then I tell you how to use the Fibonacci tool with Elliott wave theory. Also, I use the RSI and the MACD, which are, RSI, stochastic RSI, and then the MACD. And then I also have moving averages, and I did use directional movement. I haven't used that very much, but maybe I'll bring that up as well. And basically it goes through a lot of tips and trips. So I like to read this all the time, basically every week, just to continually remind myself, and so until it's like imprinted into my brain. I also have the chart patterns. Some people are not too into chart patterns. Other people are. I do have reversal chart patterns, and I have bullish chart patterns. I have bearish chart patterns. And then, of course, I have candlesticks. And I think the candlesticks are really, really important because they do tell a story. Every candlestick tells a story. And it's really just the more tools you have in your toolbox, the better of a trader you could be. But of course, we are human, and you really shouldn't overcomplicate everything. Some people like to use 50 indicators, and everything else. Other people like to just use candlesticks, and that's it. Other people like to use the chart patterns, and that's it. I use a little mix of everything, and it works out really well. It's just like what I use. And some people have particular indicators that they use. I just use the basics, RSI and MACD and stochastic RSI and volume and some other things. But really everything starts off with the candlesticks. So you learn about the candlesticks. Obviously, like I have an entire video on candlesticks, like exactly what they mean. Like, what does this mean? What's the story that this tells you? And then you have to understand how that story works with crypto, because a lot of the times, this looks super bullish, right? This looks super bullish if you understand candlesticks, but obviously it came back down and tapped it. And so That is, so this is knowledge. This right here saying that this is bullish is knowledge, but understanding that it's going to come back down and hit it again, that is experience. And so it's really just time in the game. So you have to understand the material, and then you have to understand time in the game. So with saying all of that, I'm just going to go through the charts and chart it out. So we already did BTC, and I'm going to chart it out like the big picture stuff. So this is Bitcoin. This is Bitcoin. If it comes down to 30,700, I'm going to just buy some, and I'm going to try to put on this trade. I'm also going to have a lot of spot position here. This is the mid area. So I guess if it comes down to 37,000, this is a long for me. And then if it comes up to 45,000, I will, or 44,729, that is a absolute short for me. So these are like the big three areas. And this just makes things so much easier. So we got that down. Now let's go on, to Ethereum. We already talked about Ethereum. And I'll just do this one more time. Where's the big support? Well, the big support is 1891. So obviously if it comes down to 1891, I'm a big buyer there. And 2761, 2783. This is actually a pretty good short opportunity right here. So, oh yeah, this is what I talked about before. So let me do Ethereum, and then I'll be right back. Okay, so I have the big picture for Ethereum down now. So for Ethereum, it's pretty obvious. This right here, major support for a week, and then we had this SFP like basically right there, and then we shot up, right? And then we had this right here, fake breakdown, boom, shot back up. So that's cool in one day. This is on the hourly, right? And then so if it comes back down to this is the major support right here. This is not the support. This is not the support. No, this right here is the major support zone. And you could even look left and see that it was the major support zone because there was a major resistance back there and major support right there, right? And major resistance right there. So this is definitely, 2389 is the major support. Then we have this huge red box up here with the daily 200 EMA, and we have the big resistance area, right? Like these were getting rejected, previous support, and then finally rejected, just lower highs every time right around here, along with major support and then resistance in this entire area. So it's a pretty big area. It's about what, 6%, 8%, 6%. So it's about 6%, this entire area. So a good thing to do would be, start to sell into this area right here. And this is also on the weekly time frame. You could see a very major area, this entire area. So this whole area is good for selling into, right? So if you have a lot of Ethereum, possibly selling into here. And then we have the monthly resistance up here, and then we have the 61.8. So if it does come up to 3,800, this is like, 100% sell everything, sell all the Ethereum. So I'm going to be selling all of my Ethereum. I'm going to be selling all of my altcoins. I'm going to be selling everything right here at 3,800. And that's on the higher time frame, right? So then on the lower time frame, what can you see? Well, you could see that we have this diagonal, like lower highs, and we have this diagonal right here. So we have two diagonals that we could draw. So then we go to the 4 hour, and what do we see? We see, okay, so like this is from the top to, actually this top, it doesn't even really make that much sense. Bring this down a little bit, maybe a little bit more. Yeah. So anyway, bring this down. So from the top to this top, and then we have this one, which is basically the top here, the top here, the top here, right? So 3 touches versus 2 touches. So this entire area could be a potential shorting opportunity. However, because of the way that it is right now, you don't want to risk too much on it. So I'm really only going to be risking like 1% right now on longs and on shorts until we reach these levels up here or these levels up here where there's a lot more certainty. But this one is not a bad trade to put on because the RR is 6.4, which is crazy. And if you're only risking 1%, you're not really risking that much for such a good RR for a high probability, like a high probability trade with all of the resistances being touched. It's probably going to touch it a 4th time, right? So that's Ethereum. So I have my short term, my micro play right here. And then if that doesn't work out, then my macro play is I will be buying it back, up here above all this, and then the macro play will come into play, and I'll just wait until it reaches the major weekly resistances to start selling, and that's basically how I do it. So then what I do is I look at Ethereum versus Bitcoin, and this chart pissed me off so much because look at this. This was the clear low, right? And I bought it like here. And then it closed down here, and then the next day wicked back up. So I was like, okay, we're in the clear. And then I waited, and I wanted to sell it at this resistance, right? So I'm waiting for it to hit the resistance, but obviously it didn't, and then just crashed all the way back down. So I ended up selling this at about break even, and now we're back in this giant triangle. And honestly, at this point, I don't even know if you could even call this a freaking triangle. Like, I need to scale out a little bit because it's the same thing. Like from here, 1 touch, 2 touch, 3 touch, 4 touch, almost 5, and then 6, 7, 8, 9, 10. All these touches up here. A lot of touches in the apex. So we're most likely gonna see a big move. I was totally expecting this move to do this, break down, come back up, retest it, and then fall back down. That's what I was expecting. But now we have this where it came back up and now it's back in it. So now we're hitting the resistance again. So there's just so much uncertainty that during these times, the risk you need to be risk off. Like, you need to be risk off. This is not the time to be a degen. This is not the time to just go, balls to the walls and all in or anything like that. You want to have a lot of cash on the sidelines because you just don't know what's going to happen. And I have I have a separate account, by the way, in my long-term investments that I have like 6 figures just sitting in the sidelines, just waiting for these coins to reach my buy price. And I really hope that they do. One thing that I've noticed a lot is that I tend to try to get the exact like best price ever. So I don't really do that anymore because I've always been front ran. I was front ran a lot. So now what I do is I'll buy it 20% higher than the most ideal price. And that ends up working out really well because maybe it'll come down, maybe it'll go down more than where I buy it from. But if I just hold on to it, I get it at such a good price that it usually always comes back up. And I've actually like never bought something that didn't pop back up above my buy price eventually. And like I'm talking about like not in my trading, but in my longer term investment type deal. And if it didn't pop back up, then it ends up popping up so close to my entry, my original entry, that I could always get out at a very, very minimal loss, if not at break even. So that's just a side tangent. Definitely like right now during these market conditions, I wouldn't do too much. Like I would have a lot of cash on sidelines. And you need to know then that's the key thing. You need to know the market cycles. You need to know like when to go in, when to go out, and when it makes more sense. Like it made so much sense to go all in 2020. It made so much sense to go all in January 2021. It made so much sense to go in even February 2021, all the way up to I think March was when it was starting to get a little bit frothy. And we still went on for another 2 months, April and May, before we had a big crash, right? So right now, I don't know. But when it heats up, oh man, we're gonna go hard. So just prepare for that. So anyway, going back to the ETH BTC chart, I have this triangle, but let's look at some major resistance levels on the horizontals because that's what matters most, right? So let me pause this real quick and I'll get right back to it. Okay, so I've been looking at this chart for like a little bit now, and it's like really annoying. So what do we know? So what I like to do is I like to look at what I know, right? So one thing why I was able to sell the top is because I saw that what I did was I took the Fibonacci from the top right here, right, on the monthly chart down to the bottom right here, the lows, and I looked at 61.8. I drew a line and I said, if it's going there, I'm selling everything. And this happened back in May, and then it happened again in November. And that's when I was like, okay, fuck this. I sold and I bought some stuff. So then we're on its way back. So now it's like, okay, where do we take the fib from? Well, we know that this fib from here to the bottom worked out really well because it hit the 61.8 and it ended up selling off from there. So now where do we take the fib from? Do we take the fib from the bottom to the top, right? Bottom to top. But do we take the fib from the bottom to the close, or the bottom to the highs, or what? Well, I'm going to take it from the bottom to the close because we have this confluence right here, and then we have these two confluences right here. So it just makes more sense to me. However, we have not reached the 38.2 yet. So I don't know if this is the exact place that I should be putting the fib from, or if I should be taking it from here, because this was the retest out of this breakout, and then we could take the fib like this, and then if we take the fib like this, then that means that the 38.2 is actually right here, and the 61.8 is right here, as opposed to here, right? So it's really a matter of like preferences, and this right here, taking it from the bottom from the very bottom to here, gives you a better, more ideal buy zone price right here. This ideal buy zone, I believe, was from the weekly or something like that. Yeah, this had to be from the weekly. Boom, boom, boom. Oh man, I just literally made way too many Fibonacci's. So get this. There we go. All right, this one was from. Wait, where the hell was it from? Okay, so you know what? Forget it. I'm not even gonna do it. Like this. Actually, wait a minute. I know what I could do. Give me 1 second. Actually, never mind. I thought I had an alert on this line, and I didn't. So I am erasing this, and I'm just going to erase that. So what I know is that this Fibonacci from the top to the bottom, it worked. So now I'm going to take the Fibonacci from the bottom to the top. We're going to see if that works. So bottom to top. And 38.8, 38.2 is right here. This is where I want to buy. It's in the middle. It's at the 28.3. I've never seen, it doesn't just bounce off the 23.6 unless it's super, super bullish. It always comes back down to at least the 38.2. That's why my bias is still bear. I'm still in a bearish bias until ETH against Bitcoin reaches here. We have hardly seen anything. We are just right here, right now, getting the EMA crossovers, okay? So there's a few confluences that are showing that the price should still come down to the 38.2 at the bare minimum. And maybe it comes all the way down to the 61.8. That would be like, honestly, a travesty to the market, but it's definitely possible. However, because of the altcoin, like the way altcoins are now, there's so many altcoins. I don't know if it actually will come back down here, but it's either 30.2, maybe even the 50. However, if you look left, there's not too much stuff to the left on the 50. However, there are a lot of support ranges right at 38.2. So this is definitely like long here, like absolutely. It comes down here. I'm buying ETH. I'm buying all the altcoins 100%, right? And I'm gonna go into alts, like major. And then if it comes down to 61.8, I'm gonna do it again and go all in down here, because there's confluence with this, there's confluence with this, there's confluence with this. All of these areas are really, really good, and just showing you that stuff has happened around this area with ETH against BTC. And maybe, I don't know, maybe we'll do something like this, come down, come back up, and then come down, make this like sort of head and shoulders formation type deal. If we go like that, on the monthly chart, possible. That's possible. You never know. But what I do know is that there are definitely major areas of interest. The first major area of interest is 0.057. That's the support. The major area of interest, the second, is up here at 0.0812. And so if it comes up here, I'm going to be selling. If it comes down here, I'm going to be buying. And I did have these trend lines, like this. And yeah, this has been pretty solid support. This is the weekly after all. So if we go down to the daily, you could see that it has been pretty solid support since June 2021. So a fairly long time. And we've had some false breakdowns. We've had a lot of false breakdowns, but we're still above it. So short term. So this looks bullish on the daily time frame. It looks bullish unless we've closed back below here, then it's not going to be bullish. But if let's look at the bullish scenario now. Look at this. This has been the case, right? So this has been the case. If it closes above here, this line, that might be bullish because this will be the first line. However, like I've mentioned before, that could be for like if you're intraday trading, if you're a day trader, if you are scalping, if you're trying to do the short-term plays. And but honestly, in this scenario, in these conditions, I'd rather do the big swing type plays, you know? So this area right here is a sell zone for me. And you know what? I'm just going to get rid of this because that's no longer really relevant. And I'll probably get rid of this. I'll bring this sell zone up here. Okay, and now finally, after way too long of a time, I have a very clear chart for Ethereum against Bitcoin. So this is what we have. We have the major support right here. If it comes down here, you definitely want to buy it. Not financial advice. Then we have this major resistance up here. If it comes up here, I'm definitely going to be selling it. Then we have this midterm resistance right here, midline, basically, whatever you want to call it. If it comes here, I'll convert my Ethereum to Bitcoin because Bitcoin's probably going to outperform Ethereum, whether it loses less overall or if it gains more overall, because Ethereum is probably going to go down a little bit from here. Then maybe I'll buy it back. But once it gets into this zone, I'm going to be selling it. Then on the micro scale, we have this local support. We got the bounce here. We got the bounce here. So if it comes down here, this is clearly support. So this is an obvious area to long Ethereum right here, against Bitcoin. And then if it falls down here, 2.2%, insanely good RR. So you could sell here and you could buy at the support. You could sell at the resistance. And it's like, keep it simple. KISS. Keep it simple, stupid. Just keep it simple. Buy a support, sell at resistances, and that's all you need to do. Finding the support and resistances could be a little bit difficult, but once you find it and you have it there, just these are the trades. So this is what I'm doing for Ethereum versus Bitcoin, and that's it. Yeah. So now we could finally go on to more different other cryptocurrencies. Okay, so now I'm going to start going over some of the other charts. So we're going to start off with quants because obviously it's quant network, so everyone loves it. So I am going to make it very simple, just like how I've always been doing. We have the support here. We have the resistance here. So at $138, that is the best time to buy, best time to sell. Anywhere between 138 and 151, to be honest. That's pretty good. This is the weekly. Let's look at the daily. On the daily chart, we have this huge, this is the big, okay, so this is the biggest resistance on the daily chart for sure. But I don't know what this thing is. I see what this is right here. All right, so we have this diagonal, and we have this diagonal, and we had this one, and this is what happens a lot. You draw a diagonal like this. This is why diagonals, like, they're good, but they also suck. So you have the top, you've been getting resistance, right, on this diagonal all the time, right? And then right here, and then it pumps up above it. So you're like, okay, it finally broke the diagonal. However, look at this. This is the horizontal, like right here, right where it got rejected from. This is the horizontal. Okay. And it's this diagonal. So it's this new diagonal, right? And then it finally hit it there. So just using this one horizontal would have been the way to go. And this right here is why you want to take your profits early, because if let's say that you got it, you entered a short position right here because you saw, let's say you did this, you drew this line, you entered a short position at the very top. Your take profit was down here at the support. Okay. Everyone's profit is down here. So what do the whales do? They take their profit a little bit before you and they front run you. So that's why I always, even though this is the support, I'll take my profit a little bit above it just to make sure that I get it, because a lot of times it doesn't hit it. And even right here, like this is the resistance, right? I would probably take my resistance, enter my short position like here, like with a stop loss like here, like above, like I would have just missed getting wicked out, just to like get in a little bit beforehand, get out a little bit beforehand, make sure you secure the profits, right? And then you'll actually like win more trades that way. So this is just an example of why like diagonals, they're good, but also they're not too good, because after this breaks out, you would think that it would do really well, but the horizontal won, and then it just bounced and bounced and bounced and bounced. And yeah, it's bouncing off of the diagonal as a support now, but it's still going down. So it like, is that really good? And if you get rid of it and you just look at this and you just use this as the support, that could have been a good support as well. So you know, horizontals always come first. That's the rule. That's definitely the rule. And so what I'm going to do for quant network is I'm going to hold on. I'm half and half right now in my quant position. I sold half of it, and I'm just like waiting to see what's going to happen. So if it comes down to $89, I'm going to be buying the half of USD. I'm going to be converting that into quant. And if it pumps up to 138, 139, then I'm going to be converting my quant back to USD. And then I'm going to try to buy back. And I'm literally just going to play. I'm going to play this range until this is no longer a range. That's literally it. And this is a solid range. So if I could, this is 55%. So imagine if I could accumulate 25% more quant by buying half of it here, selling half of it here, and then doing that again, selling it here, and then buying it back here, and I could get another 25%. I could have 50% more quant than what I started out with. So that's really the game until this range like is no longer the range. That's what I'm going to do. And I'm not going to be playing, this is the same for all coins, all of the coins. I'm not going to be playing these little ranges in the midterm, because you could, if you're a scalper, if you're a short-term trader, play these ranges like this and, you know, do well. You could actually do really well if you know what you're doing, if you're really good at that. That's not my forte though. Although the trading style that I do teach you, like it, obviously you could just narrow it down from the daily and the 4 hour into the 1 hour, and then you could play these, you know, and that's how you would do that. But you might get wicked out. There's a less chance of the trades working out the shorter time frame you go, because obviously the higher the time frame, the bigger the supports and the bigger the resistances. So that's that. So that's what I'm going to do for quant. I just explained. So that is quant. And let me actually also check quant against Bitcoin. Okay, and so now we have Bitcoin, we have Ethereum, we have quant. What I'm going to do now is I'm going to go into some of the trades that I'm currently in and just take a look at those charts and then plot out those charts and see pretty much if my thesis for my trades are still playing out correctly and how I want to proceed. Most likely I'm just going to stick with it and let it play out because that's what I've learned to do. But I'm going to look at them just to check it out. And then I have a list of coins that I really want to go over. So let's, including Solana, AVAX, and a lot of them, FTM. So let's start it. Okay, so the first trade that I want to, coin that I want to go over after quant is Phantom. So what I did was I started off on the monthly and I just put out the monthly close right here. And then I put out the monthly close right here. So this right here at 74 cents is the obvious major monthly close right here, and monthly close right here, and monthly close right here. So this entire area is very, very, very important. And then we have the monthly close up here, which obviously is very important, but that's like very, very high up. We are in a downtrend, so shorts are for, it's better to take shorts than longs. However, we are about 75% off of the top at this point, 71% off, and that's getting to be into very, very risky territory when it comes to shorting. So even though shorts are preferred, probably 60-40 right now, the risk that you want to take on your shorts you want to have it on your trades are very low. So unless it comes back up here. So talking about that, going into the weekly, we have the weekly time zone, and then we see that there's a major weekly SR zone right here. So obviously support right here, came back into it, tapped it, shot back up, came back into it, closed, and then got rejected and fell down. So and then obviously lots of support right here. So at $2, basically $2, that is the major SR zone. So if it does end up coming up there, like for some freak or some, crazy rally, like what happens sometimes, then this is definitely the area to short. And so I'm going to put on a short position right here, and I'm going to do this. And this will be probably a pretty big short. And I'll probably aim for right here. And actually, I don't know. That'd be a tough one. I would probably aim for here with a first take profit somewhere a little bit higher, like somewhere right here. So let me just put this as a dotted line, and I'll say first TP for short, and that'll be that. Boom. So right now, though, I am in a short position. So I did open up a short, because you could see that from the bottom to the top on the daily chart. If we go down to the daily chart and we scroll over here, we can see bottom to the top Fibonacci. It came down to the 38.2 right here, and then popped up, and it came down to the 61.8 right here, and this basically was a 61.8 first right there, and then right here, and it went up from there. So this is the Fibonacci that I'm basing my trade on right now. So we have the Fibonacci, and we have this major support and resistance level right here. So I put on a short position like this, because we have the exponential moving averages, we have the major support resistance levels, we have the previous 61.8. So there's a lot of confluences. There's also things that make it look like it will move up, such as the fact that the RSI and stochastic RSI are very oversold right now, and they're on their way up. So that looks really good. On the daily, on the weekly, you have a W on the MACD, which is super bullish. And this is the first lightly red or darker red MACD on the histogram than the other ones, and that you usually want to get in on the first sign of that. So if you're using just the MACD, you'd actually want to be long right now. And if you're using just the MACD and the RSIs, just these indicators, you want to be long. However, I am using mostly price action and the EMAs right now. So this is just a perfect example of how you could be both long bias and short bias. Like, some people are long, some people are short, and like it's all dependent on the person like actually trading. So right now I'm short bias for this, and I would really love to see this happen. If not, I'll just get out of the trade here, and I'll just simply wait until it comes up here to short it, or I'll wait till it comes back down there, and then I'll long it down there. And so it's one or the other for FTM. Okay, so the next coin that I have on my list is Matic, and this one is awesome. So first off, I'll start off on the monthly, and you could see like it just went on this insane run. In literally 1 year, Matic was one of the top performers, and it went up nearly 17,000%. Can you believe that? 17,000%. I remember it went up to $2.87, and I remember trading this at like freaking 5 cents, 8 cents, something like that. Totally nuts. So we have Matic here, and what I love about this chart is the monthly. You could sort of see it. Let's go into the weekly though. Look at the weekly. We've had this trend line. Like how I said, sometimes I don't like diagonals, sometimes I do like diagonals, but we've had this diagonal trend line since literally the beginning of 2021 so many times. Hit here, hit here, hit here, hit here, hit here, and then it broke underneath there. So the very first short position was it looked something like this. It broke beneath here, so then open up a short with the stop above the line, right? And then the take profit like right here. So this was the first short position to take. And then it came up, and then it's on its way down, which is really good. But if you missed that one, Then there's another one, which is another one that I'm in right now, which is this, starting here at $1.46, because this is the second trend line that is basically starting, same time, January 2021, and it's hit the bottom of these wicks like every single time, right there, right there, right there, right there, and then all of these. So this is another huge diagonal support resistance line. So I put on trade here, and it's super easy. It's super easy to trade because I put it on, and then if it comes up above here and it closes, then I know that I'm gonna get out of the trade because my trade will be invalidated because this is the support resistance. So if it closes above it, then that's a swing failure pattern, and then it's most likely gonna come up to at least this one. So let's go to the daily now, and if we go to the daily, we could see that this area is also like a big support resistance area, like right around here. So if it does come up to 1.508 ish or something like that, like that's a fairly big resistance. And it does, the first rate when I put it on right here, it was really good. And obviously I don't like to see the price like come all the way back up now to just underneath my entry, and I do want to, it would make more sense actually at this point to raise this up just a tad to like right over there. What I use is the 4-hour chart, so let's go into the 4-hour and just like make sure. But you don't change your trade. So I put the trade on thinking it like this exact way. And so I'm going to leave this trade on because the thing is, if it pops up here, it really shouldn't stay up. It really shouldn't stay up here for that long. Like if my trade thesis is correct, then this is a big enough resistance to where it might pop up and immediately pop back down, and I'm protected from those wicks. So like I'm fine with that. And if I get stopped out on this, like that's fine. I'll just wait for another really good setup. And if we have a really big, let's say we do something like this, like something that no one thinks is going to happen, this is where the ideal short will come in. And I'll show you this because this is really big. This is Matic right here. So if it hits right here, this entire zone is such a big resistance for Matic, around $1.90, right under that $2 mark or whatever. So $1.90, it has this huge diag, and it has the horizontal right here. So if it like does something like this and it starts coming up and we get into this zone, that would be such a good shorting opportunity. So I'm definitely gonna short up there if this trade doesn't work out and we keep on going up. If we like come up and then we come back down and it just tricks everyone out, like I don't really care. I'm not like whatever. I lost the trade. I'll just wait until a new one hits up. So fingers crossed that this pump was the last of the pump and it's not gonna like come up again. But even if it does come up to this level, hopefully it gets rejected, and that's really what I'm hoping for. And this right here is the major weekly support and the 61.8. So if we go back to the weekly chart, you could see that from the bottom to the top, 61.8 is right there. And there's also support, resistance and support. So all this stuff right here, a lot of confluence. So I'm going to take my profit a little bit before that just to make sure that I get it. And that's going to be my trade for Matic. Okay, so next up we have Cardano, and for Cardano, we obviously have the giant monthly close high right there. We have the most recent monthly support is down at 34 cents. And then we have this major support area that just got wicked into a million times right here at around $1, at about $1. And then we fell underneath that. And of course, above that, we have 1.32 and 1.76. These are two other fairly large resistance areas. And that's on the monthly. So going down into the weekly, everything basically stays the same. So yeah, the $1 mark is still the area to short. And so I would still put on a short position from right here. Like, this is still such a good short. Like, this is the weekly time frame, right? So on the weekly, we got one opportunity to short it. If you get another opportunity, can you imagine getting a second opportunity to short Cardano at like 99 cents or something like that? That would be absolutely insane. So yeah, I would definitely try shorting this again from this level, just because this is such a huge psychological level, and it was such a major support for months and months and months and months and months. And then literally since Feb, for an entire year, it was a support, and then it broke through it. So that's why this was the best place to short, was like right here. And so, you know, if it pops back up, it only needs to pop up 18-19% to get into another amazing short. So I'm definitely going to have a short position like available for Cardano right here at 97 cents. And I'll probably just target like here, 46 cents, because I just like, there's nothing here. There's no support and resistance anywhere. One thing that I will do just to have some confluence is do the Fibonacci from the bottom to the top. So if we bring this up here like this, I'll look for the 88. So make sure that this is above the 88%. So I'll probably get in probably right there. That's where I would want to do it. Just a few percentages above the 88, you know? So, and also it's 50 cents. So 50 cents is a big psychological number. So I'll do it at 51 cents, you know, just to be a little bit safer. And yeah, that would be the trade. This is still an insanely good trade to put on for Cardano. And this is what I will, you know, put on if we get lucky and it comes back up. And so I actually just realized that this video is about an hour and 45 minutes long. I went on a ton of rants in it, just giving you the inside scoop of what goes on in my mind when I'm trading. Hopefully that was either entertaining or educational, or hopefully both. And so I'm going to wrap this one up here, and then I'll make another video basically going over AVAX and Band and Sol, Near, One, Luna, and just like as many coins as I could possibly do. So I'll make another video for that. But this one, I'm just going to wrap this one up here. And yeah, I mean, that's going to be it. So hope you enjoyed it. I'll see you in the next video.